G'day everyone, welcome back to Pete's Investing. Today is May 31st, 2023. This is the spot gold price update. On our weekly indicator, it's broken down from a bullish signal to a neutral, so avoid going long at this point. And on our daily, it's broken up from a bearish signal to a neutral as well. So let me talk about both of these. What we look on the weekly is, first of all, when the CCI down here and the moving averages don't align, it gives us a neutral signal. When they align long, it gives us a long signal. When they align short, it gives us a short signal. So at the moment, it's undecided, so avoid taking any trades with the long or short positioning. On the daily, the same indicator was showing a bearish signal, and we did actually have a divergence playing out here previously on the daily. We're showing a bearish divergence on the CCI versus a bullish divergence on the price chart. And we did say once it broke through this ascending channel below these bottoms there, that was our initial target, and that's at the Fibonacci levels. So if I draw the Fibonacci between those bottoms and that high, our initial target was going to be around the 50% level range. Now what it's done, it's resting on the 50% level, so it's hit that target, and it's also currently consolidating on this minor support level. So we may see a bounce from here, possibly, but before we see that bounce, we need to see the CCI likewise break to the upside and give us a bullish signal on the indicator down here for both the CCI and the price chart moving averages to align for a bullish signal. If that was the case, we'd also probably see eventually a bullish signal on the weekly, in which case we can start taking trades on the lower time frame. So here we've got the same indicator, so you'd use the CCI and the moving averages to take those short trades. So what we've got here, I've run a couple of back tests on the bullish scenario. So this is a long back test, and this is the short back test. So you can see there, as the price moves to the upside in a bullish momentum, our profitability on the back test improves. And once the price falls off, our profitability is hit by a drawdown level like that, and you can see there multiple contracts entered affecting that profitability. Then likewise, when the price starts breaking to the upside again, like it did later on, likewise the profitability also increases. The reverse happens with the bearish scenario. So as the profitability as the price chart goes up, our profitability decreases, and when the price does decrease, our profitability increases. So just a couple of examples of how to trade using the average down approach. We don't use stop losses, but also with these, to avoid going long during this period and avoid going short during this period, we want to make sure that they, as I said previously, they align with the weekly and daily time frames. So you can see here during this weekly period, when they were going long, you would have gone long during those periods only on the daily. So that's where that would have aligned, going long during that period. Likewise, going short during that period when the weekly was declining, there were short signals on the weekly, and there were short signals also back here on the daily. So again, that would have given you profitability here on the short positioning. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to us on Patreon, where we also look at other trading strategies, and we scan for stocks, currencies and commodities on a weekly basis every weekend. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.